Hey, traders. Whoops, where are the charts? Good morning. Welcome to the office. Happy Thursday, everybody. Let's get the charts up and running here. Hope everyone's having a great morning. And oh, there's the puppy coming in. All right. Welcome, welcome. Time to caffeinate and dominate. Let's get to it. As always, I'm taking a look at the indices here this morning and taking a peek at the continued pullback. I'm going to use the word pullback, gang. I'm going to use the word retracement, mean reversion. Doesn't matter. Ham and cheese sandwich. The bottom line is, what is the context of the move lower? And the context is, what's the structure? Structure is just a fancy word for what is the current trend. And if the current trend continues to be bullish, if the current trend continues to be up, and how am I going to measure that? Three really simple things you can see right here on my chart. The bottom row of the multi-trend tool, green is bullish. Green grab candles, the GRAB grab candles, green means bullish. We're above the 200 propulsion. We're still above the 34 EMA wave. And really what we're trying to do now is just find a spot at which the pullback really this week could jive with the timing of certain hot zones, scheduled high impact events. We had one here. Let me show you here. Let's jump on over to the calendar. By the way, if you haven't checked out my YouTube channel, YouTube/Raghee Horner, there it is. All right, let's go. Just jump on over to Forex Factory, forexfactory.com. I'm going to take a look at global calendar Thursday. Because we had the bank holiday on Monday, fast forward, everything that would have been released on Wednesday gets released on Thursday, including private numbers like the ADP non-farm employment change, 8:15 this morning. So the question we ask ourselves is, at 8:15, did we see any dramatic move lower? No, in fact, the indices were already starting to move lower well before that, probably a good hour before that. The 5-minute time frame turned into a downtrend. Unemployment claims at 8:30 did nothing really other than continue the overall movement lower. And you might say, well, Rog, why did ADP and non-farm not change anything? Because it was good data. So for those of us wondering, is good data going to be sort of bearish to the indices? The answer is, well, today anyways, yes. Non-farm came in 44,000 higher than expected. That's quote unquote good. Good is bearish. I'll get to why in a moment. Unemployment claims were less than expected by 15,000. Good is bearish. And why is that? Because it doesn't put the screws to Jerome Powell and company to get with the cut quicker, cut sooner narrative, because that's what right now is for the most part baked into the cake. Cuts in March, cuts in May, cut in June, quarter point, quarter point, quarter point. We are seeing, not that it's a no, but we are seeing the percentages drop a little bit in that expectation for the quarter point cut and those successive Fed meetings. And that's not something the equity markets are going to like. That's not something stonks are going to like. They're not going to like a little less probability for the rate cut. So here we are. So yes, gang, for those of you that are wondering, indeed, good news is still bearish, or good news is still bad. By the way, that pushes out our crude oil inventories number release to 11 a.m. today, natty gas at 10:30. So that's what we've got this morning in terms of the hot zones. I'll tell you what, another thing that's one of those sneaky little hot zones that didn't used to be talked about a lot, but is definitely important, is another private number, the Challenger Gray Christmas. That's what that is. It's a private company. Challenger job cuts were lower than previous. Again, good news indicating a little bit more bearishness. So everything was good, and stonks aren't going to like it. All right, so that's where we sit this morning. Do I think that the uptrends are done? Oh, gosh, no. Remember, gang, this is not a matter of will they or won't they cut. They're going to cut. It's a matter of how soon, how highly probable is it, and which months could we see the quarter point cut. So please remember, again, this is not a binary, no, they won't, yes, they will. This is more of a nuanced, when will they and how probable is it? All right, so as always, gang, and a shout out to our Simpler Essentials room. Good to see you all. Let's go ahead and jump into a quick look at what's going on in the ES, NQ, and YM. If you have any questions, phone lines are open for your request. Let me know what you're looking at, what symbol, even what time frame, and heck, let me know if you've actually got a position or if you're looking for a position in that symbol. All right, taking a look at the S&P here. So really important, gang. We are coming out of that overall window dressing rally of December. And if you've been following Top Tier Outlook, you know that window dressing is typically followed by window undressing. In other words, whatever good stuff we put in that showroom window, right, gets taken away at some point. And the way that that works in terms of the mechanics of portfolio management is simply this. Portfolio managers don't want to own things from highs that were established in December. And yet they want to follow trends. But what's going to happen as we roll from one year to the next is now they've got 12 months. Now they've got a wide open year ahead of them to put their money into places that could outperform. That's sector rotation, gang. That's sector rotation, meaning take a look. We had a laggard in healthcare. We had a laggard in XLE. These were two major sectors. Now, major is not just the arbitrary word I use. Major actually denotes the fact that these sectors are heavily weighted in the NASDAQ, Russell, Dow, and S&P. Sometimes a combination, sometimes just one or two of the sector or one or two of the indices. But they're major sectors because they have implications to what the indices are going to do. All right, XLE was a laggard. As we see things like XLK, tech, think Apple, Microsoft. As we see things like SMH, think NVIDIA, AMD, Intel. As these are rolling over, just pulling back within the context of their trend, we're going to see, actually what we have been seeing is flows into these laggers. Voila, sector rotation. It's not an arbitrary group of symbols that would see profit taking. It's the leaders of the previous year. It's not arbitrary who's going to benefit from those inflows from the profit taking. It's going to be the laggards of that previous year. And that's exactly what we're seeing right now. So is this a new trend in the broader averages? No, this is just some sector rotation. This does not have to be the trend for even the rest of the week. In fact, we have a lot more data to come. So you might say, Rog, when might either the sector rotation keep going or when might it abruptly change? Again, we have a ton of data tomorrow. So we've gotten the major hot zones out of the way for Jan 4 going into Jan 5. We've got non-farm. Why is this a big deal? It's the big jobs number, employment rate, average hourly earnings, and then we're going to get an idea of what's going on with the employment picture. Why does that matter? Because the Federal Reserve has a dual mandate, both inflation and jobs. So we want to keep an eye on that. And then tomorrow we have the ISM Services PMI and Barkin, and it feels a little bit like a Vujade moment because just the other day we had Barkin and ISM Manufacturing PMI. But in the wake of non-farm, probably not going to be a majorly reacted hot zone because we'll already have that jobs number out there. If the jobs number is a miss at the moment, if it prints below or significantly below 168, watch how quickly the equity markets start moving higher. If good news was bearish, bad news is, you guessed it, it's bullish. And so that's what we'll be keeping an eye on. All right, so I do want to remind everybody that tomorrow, I believe, is going to be the last day of our sale, our New Year's sale. So if there's something on your wish list, if you asked Santa for something and he didn't deliver, you're looking for that simpler indicator in your stocking, no worries. Our sale is still going on. Who needs Santa? All right. So first question of the morning. Hey there, Mark. How are trade alerts sent in the Sector Secrets Mastery? Do we have to be live? All right, Mark. So we do 4 kinds of trading. So am I going to date myself if I say TV guide? So like the TV guide has at a certain time, there's this show, and at another time there's that show. That's kind of how the Sector Secrets Mastery works. Every day we have a fairly consistent timing for day trading, consistent time for swing setups, consistent day of the week for our portfolio positions, consistent time of the day of the week for tech support and Ask Me Anything Q&A, and bot scalping. So we scalp, we day trade, We swing trade and we position trade, but they're all given a specific time, consistent throughout the week. So you can tune in when you'd like. So that's the first thing. If you want to attend live, that is there. If you want to take advantage of the swing trades, meaning overnight exposure, and the position portfolio, which by the way, killed it last year. I will have a video on that. We've got a lot going on here at the offices. So I will have a video on that, how we've been positioning ourselves since previous, not this last October 23, but August to October 22, how fast forward 14 to 16 months, where are we on that portfolio? I will cover that. That's another thing that we do in the mastery. Those are sent out as alerts. So if you're looking for my swing trades and my position trades, absolutely sent out as alerts, and it will appear in the room, in our trading room, and it will also appear on your device. It'll also go out as an alert on your Simpler Trading mobile app. So it's going to be hard to miss any of the goodness. Now, we also have scalping and day trading. Those are in the room. So for those of you that want about an hour of hands-on active day trading or scanning, looking at a 5-minute time frame for entries, exits, that is in the room. So we mix it up, Mark, but everything is noted. Everything that's longer term overnight is alerted. So it's kind of hard to miss the ideas. We try to make sure that they're actionable. We try to make sure we give you a heads up on the trades. You're not scrambling because all of a sudden you get a fill alert from me. That is not how we roll. Come check out what we're doing, right? It's one thing for me to explain it. While it's on sale, Mark, look, if there's a time to come in and kick the tires, this is it. It'll be a fantastic immersion. You'll get a lot out of it. All right, aside from the trade ideas in my trades. All right, next up, MU. So MU is going to be attached to that SMH narrative, Munir. NU is going to be attached to that NASDAQ narrative as well. So nothing wrong with that. But remember that when the tide is going out, these bigger groups of stocks at the index level or at the sector level, the stock is going to have to go with it. Now, when it comes to MU, let's take a look at what we're working with here. All right. The green trend. All right, here you go. The green trend pulling back to the wave, right? This means you've got a mean reversion. The 34 EMA wave, this tool that I've been using since I was a teenager, is showing that we've pulled back. You might say, Rog, how accurate is this thing? Even without a trend, it's remarkable how often dynamic support within the context of a bullish environment is going to find how often. It's not certainty. It's not 100%. Nothing's 100%, right? But when we're talking about probabilities, more often than not, which is what trading is all about, you'll see that wave is incredibly accurate. Now, you start to add things like the wave to the daily price movement ranges. You use a price-based tool and a volatility-based tool. Now you're looking at the market through the sort of the lens of two factors. One being, what's the typical price range movement for a stock or an ETF or an index? And then what's the price plus the volatility, right? And now you've got a great 1-2 punch. There is a historical volatility rhythm to things. I mean, case in point, take a look at the 20th. Big sell-off. It looks like it's coming out of nowhere. It looks like it's about to just break the floor and crash into the basement. It hits the daily price movement range. So it's amazing how historical volatility does tend to give us insight. Now, is it always going to work? Absolutely not. In fact, on a week of FOMC meeting minutes, on a week of non-farm payroll, and a week of potential window undressing, you can see sometimes we're going to have a slightly deeper pullback. And that's exactly what we're seeing on SMH. By the way, all my cards on the table, there were 2 positions that we had trigger, a handful of setups. We were looking at GE, Amazon, the Russell. I'm trying, for whatever reason, I'm drawing a blank because clearly the coffee has not kicked in yet. Actually, I'll tell you because I can jump on over to the chat room. Oh, KRE, not IWM, KRE, SPY, XLV, and GE. So we took a really good cross section of what's happening in terms of pullbacks. So KRE, Amazon, S&P, healthcare. These are all things that we want to take advantage of as we're going into some of these pullbacks. It could be a rough go, but I'm going to, again, remember, if I'm looking at a 68% probability, so nearly 7 out of 10, I know that I'm going to have every 10 trades about 3 losers. The key is to make sure those 3 losers do not outweigh the gains, right? So remember, this isn't about win rate, because believe me, you can have an 80+% win rate. But if those 20% of losses are scaled in, added to, averaged down, they could have a disproportionate dollar amount of loss, right? So don't get caught up in percentages. Those aren't going to tell you anything. Dollar amount. What was the per point per contract, right? What were the number of points per contract? What were the dollars per contract of the gain or the loss? Anything else is just smoke and mirrors, gang. So remember that if we're looking at something that is trending and it's pulling back, we're going to keep an eye on it. And I don't want to be too aggressive here because we still have non-farm, but it makes sense to start taking advantage of some of these pullbacks. And those are things that we're doing at the moment. And ultimately, when it comes to things like MU, remember, SMH is going to be part of that whole narrative. Find the relative outperformers, right? I think MU is a great example of a relative outperformer. AMD is another great example of a relative outperformer and stock I would like to get long calls in. All right, as far as Microsoft goes, MSFT on the 1 hour. Thank you for the time frame and the symbol there. So what are we seeing here? I would be a little cautious on Microsoft. Be a little cautious on Microsoft. Is it buyable? Yes. Do I need the daily price movement range? Yes. I would not use the wave in this current environment on Microsoft. So daily price movement range, which by the way is 30% off right now during the sale. When price gets into that range like it did on, you can see here on the 14th, it actually tagged it on the 2nd. And here's the action on the 3rd. So we'll see what happens today. But you can see when we trade into that zone, again, there's a big difference. And let me just point this out here really quickly. There's a big difference. Where's my drawing tools? All right, here we go. All right, there's a big difference between shorting here, don't do it, and buying here. All right. This is support. I don't want to short into support. There's a big difference, by the way, for example, between buying here, right, and buying here. So if I say I'm going to be a buyer or I'm bullish, that's just the beginning. That's just the opening sentence of the chapter. The rest of it is, okay, if I want to be a buyer, what time frame, what price level or zone, right? What's the trigger? You know, what's going to get you to buy that call? So notice, gang, I could say I'm bullish on something. Doesn't mean I'm buying. Bullish and buying are not synonymous, but bullish should precede the setup, right? That setup needs to precede the actual entry. So keep that in mind, but I'm absolutely still bullish. I just need that daily price movement range zone. All right, next up is XLE. Hey there, Mike. XLE is a nice point of control, volume profile at yesterday's low on a 1-year chart. Hey, it nailed the daily price movement range as well. Do I use those kind of tools? Absolutely. If you've been watching Charts and Coffee here for any period of time, you'll see that we jump on over, Mike, to the volume profile view. You can see I have it already set up here, the volume profile. So what's really cool about what you noted is not only is it a point of control. Now, I always want to be specific about, is it the 2023 point of control? Is it the quarters point of control, right? And it's actually both, which is pretty cool. And then what is that overlapping with? So do we have a volume level overlapping with a volatility level? We do. And then you want to see one extra thing there, Mike? That was the opening price of the year. Isn't that interesting? That pink line there across the daily time frame all the way to the right. So yeah, do I use those kind of tools in conjunction? Absolutely. We move them, basically move them to the front of the classroom because we want to know what they have to say. And when they overlap, when they all have the same answer, you definitely have a level that's worth keeping an eye on. As far as the sale, yeah, I guess it's been updated, Jeff. Yeah, it was supposed to be Friday. You've got another week. Yes. So I guess it's been updated. So you have until the 12th. Yes, Jeff. Okay, next up. But why wait to put the tools on your charts? That's the way I look at it. All right. So next up is Lily had a big move in the last 2 days. Is it time to take profit short term? Srinivasa, I will tell you this. I don't know where you're long from. Uh, I don't know what your position was. It's not a trend that I'm necessarily looking at. I don't play momentum moves, right? This is chopping around, chopping around, chopping around. Great. It's had 2 good days. It's been benefiting for sure, my friend, from some sector rotation. But I would say look at previous highs, keep an eye on the Darvis and which time frame are you trading, what was your entry, but it certainly wouldn't hurt at least to move to break even or pay yourself, scale out. There's certainly no harm in that whatsoever. If you scale out of a half, a third of your position and then see, hey, how much higher is high? Not a bad way to go. All right, gang. As always, thanks so much for being here for Charts and Coffee. I will see you tomorrow. Same time, same station, 9 a.m. to 9:20 at the Simpler Trading YouTube channel, as well as my YouTube channel at Raghee Horner. Be good to each other, gang.